The order came suddenly and without warning. Beijing instructed its tech giants, ByteDance, Alibaba, Tencent, to immediately stop purchasing Nvidia's H20 chips. This wasn't a suggestion or a guideline, it was a direct order. The move sent shockwaves through the US semiconductor industry and forced Wall Street to confront a reality it had long chosen to ignore. Just as Washington believed it had found leverage by slapping tariffs on US chip sales to China, Beijing flipped the game, telling its companies to cancel those purchases entirely. And that matters because China is the world's largest buyer of advanced semiconductors. According to Bloomberg, Nvidia made over $17 billion from Chinese sales in the last fiscal year, more than 13% of its total revenue. Take that away, and suddenly, America's AI champion looks exposed in ways analysts hadn't priced in. There's an immediate contradiction at play. The Trump administration had framed its chip deal with Nvidia and AMD as a national security win. Allow limited chip sales to China, but funnel 15% of the revenue straight into the US Treasury. But that win may have been an illusion. Beijing responded fast and hard, framing purchases of American chips as not just costly, but unpatriotic. It was a clear signal to Chinese tech firms. Every dollar you spend on US chips helps fund your geopolitical rival, and the markets responded instantly. Reuters reported that shares in China's Semiconductor Manufacturing International Corporation jumped 5% in one trading session, as investors bet demand would now shift to domestic alternatives. SMIC, long considered a laggard, suddenly looked like the safer play. Meanwhile, Nvidia slipped. AMD fell. And investors woke up to the fact that Washington's clever revenue-sharing plan only worked as long as China played along. But Beijing just walked away, and it didn't stop there. Behind closed doors, Chinese regulators summoned executives and asked them point blank, "Why are you ordering Nvidia's H20 chips instead of buying from Huawei?" It wasn't a question of performance or specs, it was a challenge to their loyalty. And the message landed. The Financial Times reported that some Chinese firms immediately started scaling back orders, even before a formal ban could be issued. In a system where informal guidance often carries the weight of law, the safest move was simply to comply. The ripple effects are now hitting the broader supply chain. Bloomberg reported that major US chip equipment makers, Applied Materials, Lam Research, and KLA, could now face billions in lost orders as Chinese fabs recalibrate their procurement strategies. If Nvidia and AMD lose Chinese customers, upstream suppliers feel the pain too. America's entire semiconductor ecosystem, from top to bottom, gets squeezed. Meanwhile, in July, China announced it would expand its National Semiconductor Fund by another $47 billion. That's the third such fund since 2014, all aimed at financing China's push for AI chip independence. That number isn't theoretical. It's more than the US has distributed so far under the CHIPS Act. And here's where it gets even more real. Analysts at Goldman Sachs now estimate that a full Chinese block on Nvidia's H20 chip could shave 0.3 percentage points off US GDP growth in 2025, just from the loss in semiconductor exports. In a fragile economy where July's deficit alone hit $291 billion, that's not a blip, it's a systemic threat. What we're seeing is an inversion no one wanted to acknowledge. The more Washington leans on tariffs and revenue skims, the faster Beijing pushes for independence. And with each canceled order, US companies don't just lose revenue, they lose time. And in the tech world, time is the one resource you can't buy back. Nvidia tried to fight back publicly, insisting the H20 chip wasn't a military product, wasn't used in government infrastructure, and posed no national security risks. Executives emphasized there were no hidden kill switches, no backdoors. But that missed the point. China isn't just worried about the technology, it's using fear, real or perceived, as a tool to starve US chip makers and accelerate its own progress. And the first signs of that shift are now visible in the data. In July 2025, China's total imports rose just over 4%, while its exports to the US dropped by double digits. That's not decoupling, it's rebalancing. Sales to Southeast Asia jumped 13%, to Africa 21%, and to Europe nearly 7%. The rhetoric around decoupling sounded like US control, but the numbers show it's China that's steadily reducing its reliance on America and deepening ties elsewhere. Here's where the contradictions become harder to ignore. 4 months into the tariff war, even Trump ally Scott Bessent had to concede the truth. It's US importers, American businesses, who are paying these tariffs, not Chinese exporters. The selling point to the public, that tariffs punish China, has collapsed under scrutiny. Reuters data shows that more than 446 US companies have filed for bankruptcy this year, the highest level in 15 years, even surpassing the peak during the pandemic. No exporter is willingly absorbing a 30% hit just to continue selling to the US. They're walking away. And that raises a hard new question. If the tariff model is failing, if China can redirect exports, if it can use its massive consumer base as leverage against US chip makers, then what leverage does Washington really have left? Let's look at the numbers. In July alone, the US budget deficit was $291 billion. Treasury data shows that despite bringing in $27 billion in customs duties, federal outlays rose 10%, while revenue grew only 2%. Tariffs are no longer reducing the deficit. They're barely covering a fraction of America's ballooning spending. That 15% tax on chip sales? It's starting to look less like a strategy, and more like a band-aid on a deepening fiscal wound. Still, the rhetoric persists. Trump continues to promise a future of reshored factories, lower risk, and an end to dependence on China. But there's a fundamental problem. To reshore effectively, the US still needs the very materials and components China dominates: rare earths, critical metals, and the intermediate goods essential to EVs, semiconductors, and even defense systems. So the contradiction remains. The US wants independence, but it's deeply tied to the supply chains of the rival it's trying to contain. Over 70% of rare earth imports to the US still come from China. That's not just a number, it's a structural dependency. And it sets the stage for the next escalation. Think about what it means to build an AI-powered defense sector while the materials needed to manufacture guidance systems and advanced optics remain under Beijing's control. Even if Washington scrambles to source rare earths from other places, like Malaysia, Japan, or even Russia, the supply will shrink and the cost will rise. China doesn't need to launch a full-scale embargo. All it has to do is increase friction, and suddenly the whole strategy begins to fall apart. Now shift your focus back to chips. Before the Trump administration's April restrictions, China's demand for high-end GPUs was estimated at around 1.5 million units, valued at over $20 billion, according to Bloomberg Intelligence. Cutting off that demand creates a massive vacuum, and domestic players like Huawei are stepping in to fill it. Reuters has already reported that Huawei's Ascend AI chips are being promoted as the patriotic choice. And as Beijing pours billions into subsidizing its homegrown fabs, every lost sale for Nvidia becomes fuel for Chinese competitors. The irony couldn't be clearer. Policies meant to slow China's rise are, in practice, speeding it up. US firms like Nvidia are being forced to raise prices in their domestic market to make up for lost revenue from China. That makes them less competitive globally. Meanwhile, China is seizing the moment, scaling production, cutting costs, and gaining market share across emerging economies. And the numbers don't lie. China's production of industrial robots soared by 52% in April alone, over 71,000 units in a single month. Couple that with the rapid integration of AI into Chinese manufacturing, and the strategy becomes obvious. While Washington taxes American firms, Beijing is automating, lowering costs, and building demand for its own AI chips. At this stage, the contradiction is hard to deny. Trump and his economic allies claim tariffs are strengthening the US economy. But the evidence says otherwise. Rising bankruptcies, widening deficits, and a global shift toward Beijing-led markets. China, meanwhile, is using a powerful mix of consumer pressure, regulatory action, and industrial investment to tilt the playing field in its favor. And this leads to the unavoidable question: what happens to US technological leadership if its top firms are cut off from the world's biggest growth market? Nvidia and AMD can survive without Chinese sales, but that's not the point. Innovation at the highest level requires volume. Cutting-edge R&D depends on billions in recurring revenue. Without it, America's pace of progress slows, and China's accelerates. By the time we reach the final twist, the narrative flips entirely. Washington believed that taxing chip exports would showcase American strength. Instead, it revealed a deeper dependence. In trying to control the flow of technology, it reminded Beijing just how much leverage its market really holds. And China didn't respond with negotiation or compromise, it responded with cancellations. Here's the brutal irony. Every policy intended to punish China has instead boxed in US firms, swelled the deficit, and encouraged global supply chains to reroute around America. What was meant to be a resolution has become a reversal. The world's second largest economy refused to play by US rules, so it rewrote them. Tariffs intended to weaken China ended up subsidizing its rise. Export controls meant to isolate Beijing only motivated it to build more at home. And a single directive, stop buying US chips, did more to undermine Washington's leverage than months of trade war rhetoric ever could. And so, the contradiction remains unanswered. Who really blinked first? Scott Bessent? Or the strategy itself? Enjoyed this breakdown? Don't forget to like the video and subscribe to the Timefold channel for more deep dives into the stories reshaping global power.